October 31st, 2025. A research organization called IRIAS, the International Research Institute for Advanced Systems, announced a pilot program for something they're calling the Unit, a gold-anchored digital settlement instrument backed 40% by physical gold and 60% by BRICS currencies. Now, before we go further, let's be clear about what this is and what it isn't. This is not an official BRICS government currency. This is a research pilot supported by some BRICS-affiliated entities and technology partners. Russian Foreign Minister Sergei Lavrov was explicit at the July 2025 BRICS summit. No one in the BRICS community is raising the issue of replacing the dollar. Indian officials essentially withdrew support for any unified BRICS currency, citing concerns about economic sovereignty. So why does this pilot program matter? Because even though it's not official policy, it reveals something critical. The infrastructure is being tested, the technology is being developed, and the concept of physically backed settlement systems as an alternative to Western paper markets is moving from theory to prototype. And here's what almost nobody's discussing. While headlines focus on de-dollarization and gold backing, there's a potential silver dimension to this story that could have massive implications. Not confirmed, not announced, but suggested by patterns in trade flows, stockpiling behavior, and industrial demand that are all matters of public record. Let me show you what we know for certain, what we can reasonably infer from documented behavior, and what remains pure speculation. Because understanding the difference between facts and projections is how you avoid getting blindsided by narratives that sound good but aren't grounded in reality. First, let's establish the confirmed facts about BRICS trade developments, because there's plenty of real activity without needing to speculate. At the July 2025 BRICS summit in Rio de Janeiro, member nations formally agreed to accelerate the use of local currencies in bilateral trade. This is documented. Brazil-China trade increasingly settles in reais and yuan. Russia-India trade uses rubles and rupees. These are actual transactions happening right now, reported by both governments and verified by trade data. China's cross-border interbank payment system, CIPS, has expanded to connect nearly 5,000 banking institutions globally as of 2025. Transaction volumes have grown significantly in Asia, Middle East, and Asia-Africa corridors. This is publicly reported data from CIPS itself. BRICS central banks purchased 166 tons of gold in Q2 2025, a 41% increase from typical quarterly averages according to World Gold Council data. China, Russia, India, and other BRICS nations have been consistent gold buyers for years. The numbers are transparent and verifiable. The IRIAS Unit pilot exists. It was announced October 31st, 2025. The stated structure is 40% gold backing, 60% currency basket, using blockchain technology for settlement. Whether this becomes anything more than a research project is unknown, but the pilot is real. Now here's what we can reasonably infer from documented behavior, even if official statements don't confirm intent. BRICS nations are reducing dollar dependency gradually. We see this in declining U.S. Treasury holdings by China, from $1.3 trillion in 2013 to $775 billion by late 2024. We see it in trade agreements that explicitly avoid dollar settlement. We see it in gold accumulation patterns. The direction is clear, even if the endpoint and timeline aren't. There's a preference emerging for physical settlement over paper promises. Shanghai Gold Exchange already handles more physical gold delivery than COMEX, despite being newer. When trade agreements between BRICS nations specify local currency settlement, they're choosing direct exchange over dollar intermediated clearing. This suggests a philosophical shift toward tangible value. Silver, as an industrial commodity critical to renewable energy, electronics, and EVs, has strategic value beyond its monetary properties. BRICS nations collectively consume over 50% of global industrial silver. Whether there's a coordinated strategy or just parallel national interests, the outcome is similar, increasing control over supply chains for critical materials. Now, let's be explicit about what's speculative analysis, not confirmed fact. That BRICS has a coordinated silver strategy as a deliberate policy. I found no official documents, no government statements, no verified leaks confirming this. What we have are patterns. China restricting small silver exporter licenses, India importing record silver volumes, Russia adding precious metals to reserve discussions. These could be coordinated, they could be coincidental, or pattern matching, not reporting confirmed plans. That the unit system will scale to become a major trade settlement mechanism. It's a pilot. Most pilots fail. Even successful pilots take years to scale. The idea that this becomes operational for significant BRICS trade by 2026 or 2027 is optimistic projection, not established fact. Could it happen? Yes. Is it confirmed? No. That Western paper markets will break or become irrelevant due to BRICS alternatives. This is scenario modeling, not prediction. COMEX and LBMA have operated for decades. They're deeply embedded in global finance. Could alternative systems challenge them? Theoretically. Will they? Unknown. We're exploring possibilities, not certainties. With those distinctions clear, let me show you why the silver dimension, even as speculation, deserves serious analysis. Because even if there's no coordinated strategy, the structural dynamics create similar outcomes. Silver is different from gold in one critical way. Industrial necessity. Gold sits in vaults. Central banks hold it. Investors buy it. But industrial demand for gold is modest, around 400 tons annually for electronics and other applications. You can run a modern economy without using much gold. Silver? You cannot. Industrial demand hit 665 million ounces in 2025, according to Silver Institute data. That's 53% of total demand. Solar panels require silver paste. Electric vehicles need silver contacts. 5G infrastructure uses silver-plated components. AI data centers depend on silver in servers and cooling systems. These aren't optional. They're engineering requirements. And here's the documented fact. BRICS nations are positioned at every critical point in silver supply chains. China produces approximately 13% of global silver mine output. China also manufactures 78% of global solar panels. China produces 60% of global EVs. India is the world's largest silver importer, bringing in 700 tons in October 2025 alone, according to customs data. Russia produces roughly 7% of global silver. This isn't speculation. These are publicly reported production and trade figures. What's speculative is whether BRICS nations will leverage this positioning strategically, but the capability exists whether intent does or not. Now let me show you how alternative trade systems, if they scale, could theoretically pressure Western paper markets. This is scenario modeling, not prediction. Western precious metals markets operate on fractional reserves. This is documented and acknowledged. COMEX Silver maintains approximately 113 million ounces of registered inventory against open interest representing 650 million to 900 million ounces, depending on the contract month. That's a backing ratio of 12% to 17%. These numbers are published daily by CME Group. London's LBMA operates similarly. Daily trading volume of over 2 billion ounces gross against physical free float, estimated around 155 million ounces by market analysts. The leverage is substantial. This works as long as physical delivery demands remain below a certain threshold, historically under 2% of contracts. Now, here's the theoretical pressure point. If alternative trade systems require physical settlement rather than paper promises, they remove metal from the pool available to Western exchanges. We've seen this pattern with Shanghai Gold Exchange, which requires physical delivery for all contracts. As Shanghai volumes grew, available gold for Western markets tightened. Apply this logic to silver. If BRICS trade channels, whether through the unit system or bilateral arrangements or future exchanges, prioritize physical delivery, and if volumes scale significantly, Western fractional reserve markets face two options. Either source additional physical metal to maintain backing ratios, which would drive prices higher as supply is already tight, or accept that paper prices and physical prices diverge, which destroys credibility. This isn't prediction. This is mechanical analysis. If X happens, then Y becomes likely. The question is whether X actually happens at scale. Analyst Andrew Maguire documented stress signals in real time during 2025. Exchange for physical premiums on COMEX hit 92 cents per ounce on July 11, 2025. That premium represents the cost to convert paper silver into actual deliverable metal. By December, premiums had compressed to 40 cents, but remained elevated compared to historical norms of 5 to 15 cents. These premiums prove that even now, without alternative systems at scale, paper and physical markets show stress. The speculative question is, what happens if that stress intensifies due to alternative settlement systems removing physical supply? Let me address the timeline question, because this is where speculation needs the most caution. When could alternative systems reach meaningful scale? Most institutional analysts expect any significant BRICS currency or trade system implementation in the 2027 to 2030 timeframe at earliest. The unit pilot is years away from operational scale if it progresses at all. Bilateral local currency arrangements will grow gradually but won't dominate trade flows in the next 24 months. If BRICS nations prioritize development, if technology proves functional, if political will remain strong, we could see accelerated adoption by 2026 to 2027. The infrastructure exists. CIPS is operational. Blockchain settlement technology works. It's about scale and adoption, which can happen faster than expected if conditions align, probably somewhere between these extremes. Gradual growth of alternative systems over 5 to 10 years, with periodic surges during crisis moments when dollar weaponization makes alternatives attractive. Not sudden replacement. Slow erosion of Western market dominance. The silver revaluation scenario depends entirely on this timeline. If alternative systems scale quickly and require physical backing, silver could revalue dramatically to reflect scarcity of deliverable metal versus paper claims. Gold-silver ratio compression from current 65.1 toward historical averages of 50.1 or 60.1, combined with gold strength, could push silver toward $100 to $150 in a scenario where physical markets dominate pricing. But that's scenario analysis based on multiple assumptions. It's not a forecast of what will happen. It's an exploration of what could happen if certain conditions materialize. Now let me show you what we're watching for. The signals that would confirm this scenario is unfolding versus remaining theoretical. Signal 1, formal announcement of a BRICS precious metals exchange, rumored for 2026, possibly at the next summit hosted by India. If this becomes real, with operational vaults, transparent inventory reporting, and meaningful trading volumes, it's a major development. Until announced, it's speculation. Signal 2, expansion of the unit pilot to include official government participation and actual trade settlements beyond test transactions. If Russia starts accepting units for oil payments, if China uses units for manufacturing exports, if bilateral trade scales to billions of dollars monthly, the pilot becomes significant. Currently, it's a research project. Signal 3, acceleration of gold and silver accumulation by BRICS central banks beyond current rates. We're already seeing elevated gold buying. If that intensifies, or if silver starts appearing in official reserve reporting, it confirms strategic intent. Right now, we're inferring from trade data and mine production patterns. Signal 4, physical delivery stress at Western exchanges intensifying. If COMEX registered inventory continues draining, if EFP premiums spike back above $1 per ounce, if lease rates hit double digits and stay there, it suggests physical tightness is overwhelming paper markets. We saw stress in 2025. Whether it becomes a crisis depends on how 2026 unfolds. Signal 5, official policy statements from BRICS nations explicitly discussing precious metals, trade infrastructure, or physical settlement requirements. Absence of such statements doesn't mean nothing's happening, as strategic initiatives often proceed quietly. But presence of statements would remove speculation and confirm intent. As of December 19th, 2025, we have Signal 1 in preliminary form with the IRIAS pilot. We have partial evidence for Signal 3 with elevated gold buying. Signals 2, 4, and 5 are pending. This is why the analysis remains speculative rather than conclusive. Let me address the elephant in the room. Why would I present speculative analysis if it's not confirmed? Because markets don't wait for official confirmation. By the time governments announce, yes, we built alternative systems to challenge Western dominance, the opportunity to position ahead of that announcement is gone. Pattern recognition requires analyzing incomplete information and making probabilistic assessments. The key is being transparent about what's known versus unknown. Not presenting speculation as fact, not claiming certainty where uncertainty exists, but also not ignoring patterns just because they're not officially confirmed. The reference scripts I'm following demonstrate this approach. They analyze mechanisms, explore scenarios, present data, but stop short of definitive predictions. That's the model here. So where does this leave us? December 19th, 2025. Silver at 67.40. BRICS. Nations demonstrably reducing dollar dependency through bilateral trade agreements. Gold accumulation at elevated levels. Alternative payment infrastructure, operational and growing. A pilot program testing physical-backed settlement. An industrial silver demand concentrated in nations building these alternative systems. These are facts. What they mean for the future remains open to interpretation. The speculative scenario that BRICS could leverage silver as a strategic pressure point through alternative trade systems requiring physical settlement is plausible based on documented positioning and stated policy directions. But plausible isn't certain. If alternative systems scale, if physical backing becomes standard, if Western fractional reserve markets face delivery stress they can't resolve, silver could revalue significantly higher. Not because BRICS attacked Western markets, but because Western markets were built on leverage that can't survive physical demand at scale. But that's a multi-year process with many potential failure points. The unit pilot could fail, political will could fracture, Western markets could adapt, technology could prove insufficient. Any of these derail the scenario. The purpose of this analysis isn't to predict the future. It's to map possibilities so you can watch for confirmation or refutation. If signals appear suggesting alternative systems are scaling, you're prepared. If they don't, you haven't based decisions on speculation presented as fact. This is how you analyze structural shifts. Map the infrastructure, track the data, identify the patterns, acknowledge the uncertainty, and watch for signals that confirm or deny the scenario. The BRICS silver strategy, if it exists as a coordinated policy, remains unconfirmed. But the capability exists, the positioning is documented, And the infrastructure is being tested. Whether capability becomes strategy, whether testing becomes implementation, whether 2026 sees acceleration or stagnation, those are the questions we'll be tracking. Because in markets, understanding what could happen and why and under what conditions, that's often more valuable than certainty about what will happen. Certainty is usually wrong. Probability mapping is how you survive structural transitions. The facts are clear. BRICS nations are building alternatives to dollar-dominated trade. They're accumulating gold. They're positioned in silver supply chains. They're testing physical-backed settlement systems. These are not speculations. These are documented realities. What happens next? That's speculation. And speculation, clearly labeled as such, is how you prepare for possibilities without pretending they're certainties. Welcome to the analysis of what might be the most significant shift in precious metals markets in 50 years, or what might be a research pilot that goes nowhere while Western dominance persists. We're watching in real time to find out which.